Welcome to the deep dive. We take the sources you send us, dig through them, and pull out the really interesting bits for you.
Yep, that's the plan.
Today we're talking about Warren Buffett, but maybe not in the way you usually hear about him.
Right. Not just the investment genius narrative.
Exactly. We're looking at the role fear actually played in his incredible career. We found sort of 7 key moments or stages where he faced some significant fears.
And the fascinating part is how he dealt with them, how he adapted. It gives you, I think, a much richer picture.
Yeah, it feels like a different angle on a story many people think they know. We often focus on the wins, right? The bold moves.
But understanding the anxieties, the fears behind the scenes, and how someone like Buffett managed them, that's where the really useful insights are, I think. Stuff that connects more to our own lives.
Okay, so let's dive in. First up, the fear of starting small, building that initial foundation. It's easy to see Berkshire Hathaway now and forget, well, everyone starts somewhere.
Absolutely. And his start, while ambitious, wasn't maybe as explosive as you might think. He launched his investment partnership at 26
Okay.
with about $174,000. Now, that was real money then, definitely, but maybe not the giant war chest you'd imagine for someone who'd eventually become, well, Warren Buffett.
Right. It feels grounded.
It does. And you see that caution or maybe realism in his earlier stuff, too. Selling gum, magazines, even trying stocks when he was just a kid, 11 years old.
And didn't he have an early experience selling stocks that taught him something?
Oh, yeah. He apparently regretted selling some early stock investments too soon. Watched them soar after he sold. That kind of thing sticks with you. It's a powerful lesson learned early.
So looking back, how did starting relatively small, maybe even feeling that sting of selling too early actually help him?
Well, those experiences were crucial,
Yeah.
absolutely foundational. Starting small meant he had to learn the nuts and bolts of business and investing from the ground up. Really understand it.
Hands-on experience.
Exactly. And that regret about selling early. That probably taught him more about patience and long-term thinking than any book could have. It wasn't just theory. It was, felt. Plus all those childhood hustles. They built this really thrifty, resourceful mindset that stayed with him. Someone who starts with, say, millions might just skip over learning those kinds of lessons.
So for you listening, what's the takeaway from Buffett's early days? If you're starting something, what can you learn?
I think the big one is just start. Use the resources you actually have right now. Don't get hung up on needing everything to be perfect or massive from day one.
Yeah, don't let the scale intimidate you.
Right. And value those early experiences, even the mistakes. Maybe especially the mistakes. They're just data. And try to build that habit of being resourceful, cost conscious. It's always valuable.
Thinking about those early challenges, what was he really up against? What were the competitors back then?
Well, the obvious one was limited money. His own personal funds weren't huge. Then building a reputation from scratch. No track record.
Ah.
Yeah, and just the general difficulty of getting any new business off the ground and keeping it going. It's always hard.
So for entrepreneurs listening, what's the lesson from how he navigated that?
Don't let limited cash stop you. Think smart about how you use it, and maybe look for good partners.
Right, partnerships can be key.
Definitely. And get that hands-on experience however you can, even small scale. And crucially, change how you think about mistakes. They're not failures to be buried. They're learning opportunities to build on.
Okay, let's move on. Section 2, the fear of market irrationality. You know, how markets can just go crazy sometimes. How did Buffett handle that volatility?
Yeah, this is core Buffett, isn't it?
Mm.
He realized, apparently quite early, that big market swings often have, well, less to do with a company's actual value.
And more to do with.
More to do with investors' emotions, fear and greed basically running the show. He saw that markets aren't always rational places because, well, people aren't always rational.
Our mentality.
Exactly. He warned against that constantly.
Mm.
Don't just follow the crowd.
So how did understanding that markets can be irrational actually help him turn into an advantage?
It let him be a contrarian. When everyone else was freaking out and selling good companies cheap because of fear,
He saw an opportunity.
right? He could stay calm, look at the actual business value, and basically go shopping. Being rational when others weren't became, his superpower almost. It let him buy low.
So for you listening, when things get volatile in your market or industry, what's the application here?
Emotional control.
Mm.
That's huge. Whether you're investing or running a business, you got to keep your head.
Be fearful when others are greedy.
And greedy when others are fearful. That classic line, it really sums it up. Don't let panic selling or, FOMO buying dictate your strategy. Stick to your plan.
What were the main forces, the competitors he was fighting against with this irrationality?
Well, human emotion itself,
Hmm.
fear, greed,
Mm.
they're incredibly powerful forces in markets.
Hard to resist.
Very. And the pull of the herd, doing what everyone else is doing. Plus, just all the short-term noise, daily price jumps, news headlines. It can easily distract you from the long game.
So pulling out the lessons for entrepreneurs from this.
Emotional intelligence.
Yeah.
It's not just for personal relationships, it's critical for business judgment. Don't just copy competitors or chase trends without really understanding why.
Focus on the fundamental.
Yes. Keep your eye on the long-term value you're building, not the short-term market craziness.
Okay, shifting gears a bit. Section 3, the fear of public speaking. This one's more personal. It's kind of surprising given how articulate he is now.
It really is. He's openly talked about how terrified he was of public speaking, all through high school, college.
Just nervous or?
No, like physically ill at the thought of giving a presentation. Real terror. He even hesitated, apparently, to sign up for a Dale Carnegie course that was specifically designed to help with that fear.
Wow. So what changed, and what did overcoming that fear actually do for him?
Taking that course was the turning point. He decided he had to confront it. And it was, by his account, a massive personal transformation.
From shy to confident speaker.
Pretty much. He really worked at it and mastered it. And think about how crucial that skill became. As a CEO, communicating with shareholders, giving talks, even writing those famous letters. It all flows from being able to communicate effectively.
So for anyone listening who maybe hates public speaking or has some other fear holding them back, what's the lesson from Buffett?
Face it head on. Don't just avoid it. That seems to be the key.
Easier said than done sometimes.
Oh, for sure. But start small, maybe. Take little steps to build confidence. The crucial thing is taking action, even when you're scared. Just doing something breaks the paralysis.
What were the competitors here? What was he really fighting against?
His own internal anxiety, basically.
Yeah.
Shyness. Then, the actual situations that demanded speaking. You can't always avoid them in life or business.
And just the natural tendency to avoid stuff that makes us uncomfortable.
Exactly. We're wired to avoid fear triggers.
So entrepreneurial insights from this personal battle.
Well, maybe that being introverted isn't a blocker. You can leverage your strengths, but also you need to identify skills you need, even if they feel uncomfortable, and then, figure out how to develop them.
Overcoming personal fears can unlock a lot of potential.
Absolutely. Professional growth, leadership,
Hmm.
it was often tied to pushing past those comfort zones.
Okay, let's talk about a core investment principle. Section 4, the fear of the unknown, staying within the circle of competence. He's famous for this discipline.
Yeah, this is fundamental to how he manages risk.
Yeah.
He just consistently refuses to invest in things he doesn't understand thoroughly.
Like early tech companies, for example.
That's the classic example. He stayed away because he felt he didn't really get the business models, the long-term economics. He sticks to his circle of competence.
Which is basic.
The areas, the industries, the businesses where he feels he has genuine knowledge and expertise. Even now with something huge like AI, he'll say, look, it's important, but I don't really understand it deeply.
So what's the upside of being so strict about sticking to what you know?
Well, the main thing is avoiding big mistakes. Avoiding risks you don't really grasp.
Like during the dot-com bubble.
Exactly. He sat that out, largely, while others got burned investing in companies they didn't understand. Sticking to his circle means he puts money where he has a real edge, where he can make informed judgments about value.
So for listeners, how does this circle of competence idea apply outside of investing, in business or careers?
Focus your energy, your time, your resources on the things you genuinely understand, where you have some expertise.
And keep learning.
Definitely. Commit to learning to expand that circle over time. But don't pretend you know things you don't. A lot of risk, maybe most risk, comes from acting without enough knowledge.
What makes it hard to stay inside that circle? What are the competitors?
Well, some industries are just complex and change super fast, hard to keep up.
And the temptation of the next big thing?
Huge temptation. FOMO. Seeing others make money in areas you don't understand. It's tough to resist jumping in. And just the danger of making big decisions based on, flimsy research or gut feelings instead of real analysis.
So the lesson for entrepreneurs here:
Build deep expertise in your field. Operate mostly within that knowledge base.
keep learning, stay informed.
Critical for staying relevant. And always, always do your homework. Understand your market. That's your best defense against unnecessary risk.
All right, let's move to Section 5, The fear of making mistakes and the power of candor. Nobody's perfect, right? How does Buffett deal with errors?
Exactly. He seems to understand that mistakes are just part of the game if you're doing anything worthwhile. His focus isn't on avoiding mistakes entirely, which is impossible, but on learning from them, and crucially, being honest about them.
He talks about his mistakes pretty openly, doesn't he?
Remarkably so. In his shareholder letters, interviews, he'll discuss specific bad calls, like acknowledging issues with the Pacificor acquisition, or even early mistakes with Berkshire Hathaway itself. That level of transparency is pretty rare.
How has being so open about screw-ups actually helped him?
Well, analyzing those errors has clearly helped him refine his whole investment approach over decades. It strengthens the philosophy.
Builds trust, too, I imagine.
Massively. Being upfront about failures builds credibility and accountability with shareholders, employees, everyone. And, maybe most importantly, learning from a mistake is the best way to avoid repeating it. It leads to better decisions down the road.
So for anyone listening who leads a team or runs a business, what's the practical takeaway?
Don't hide mistakes. Acknowledge them. Dig into why they happened. Learn the lesson.
Be transparent.
Yeah, practice honesty, especially when things go wrong. Frame failures as learning opportunities, not something to assign blame for. Use them to get better, to adjust your strategy.
What makes being candid about mistakes so hard? What are the competitors to that approach?
Well, the potential fallout from bad decisions can be scary. Reputational damage, financial loss.
Yeah, that fear of consequences.
Right. And just the human tendency to want to cover up errors, avoid looking bad. That lack of transparency kills trust and prevents learning. And then there's complacency, getting successful and thinking you don't make mistakes anymore. That's dangerous.
So key entrepreneurial takeaways on mistakes.
Don't fear making mistakes. Fear not learning from them. Build a culture where it's okay to admit errors and analyze them openly. Accountability, but focused on learning.
And integrity matters.
Hugely. Leadership that owns up to failures is essential for long-term trust and sustainability.
Okay, this next one feels very current. Section 6, the fear of disruptive technology, specifically the power of AI. He sounded quite alarmed about this recently.
He really has. He's expressed, serious concern about AI, not necessarily denying its potential benefits, but focusing on the potential downsides, the negative applications.
What specifically worries him?
Immense power, and the fact that we might not be able to fully control it. He told a story about seeing a deepfake video of himself that completely fooled him, highlighting how sophisticated the deception can be.
Wow.
And he's compared AI's development to the creation of the atomic bomb, something with enormous power that, once unleashed, is very hard to put back in the bottle. He literally said, "It scares the hell out of me."
That's strong language from him. Does he see any good in it at all?
Yes, he does acknowledge there could be terrific benefits to society.
Yeah.
But the key is if it's developed and used responsibly. He stresses the need for really smart people to understand it deeply and guide it carefully.
So for those of us who aren't AI experts, what should we be taking away from his concerns about these kinds of powerful new technologies?
Pay attention. Even if you don't get the tech details, understand the potential impact of these major shifts.
Think about the ethics, the downsides.
Exactly. Don't just focus on the hype. Consider the risks and ethical questions. And make sure your team, or you yourself, have access to people who do understand this stuff to help navigate it.
What are the competitors when we think about the fear around AI?
Well, the potential for deception, like those deepfakes, is a big one. The sheer unpredictability of where super advanced AI might lead.
The control issue he mentioned.
Right. And just the massive challenge of making sure such powerful technology is used for good, not harm. That's a huge societal challenge.
And the lessons for entrepreneurs and business leaders facing this tech wave.
Stay informed about the big picture, even if it's outside your direct expertise. Think critically about the ethical side of new tech in your industry.
And invest in talent.
Yeah. Invest in people and resources that help your organization understand and adapt to these really complex technological changes responsibly.
Okay, last section. Section 7, the fear of losing control, which connects to the patience principle. This feels like vintage Buffett.
Absolutely core to his success. Maybe it's less overt fear and more a deep-seated principle, but he constantly warns against impulsive decisions, buying or selling based on rumors or market noise.
The impatience trap.
Exactly. His famous line about the stock market transferring money from the impatient to the patient. That says it all. He just refuses to chase short-term trends, even if he misses out on some temporary gains. That takes discipline.
What are the real benefits of being so patient in markets or in business?
Compounding. It allows your investments or your business efforts to grow dramatically over long periods. It's like magic, but it requires time.
It also lets you wait for the right pitch.
Precisely. Patience gives you the space to wait for those truly outstanding opportunities rather than jumping at mediocre ones, and it stops you from wrecking a good long-term strategy just because the market had a bad week or month.
So how can we, cultivate that kind of patience in our own work and lives? It's hard sometimes.
It really is. I think it starts with having a clear long-term vision, know where you're trying to go, and then consciously resist reacting to every little bump in the road.
See patience as a strength.
Yes, treat patience like a skill to develop. Big achievements usually take time. Practice waiting for the right moment, the right opportunity, instead of acting out of FOMO or pressure.
What makes patience so difficult? What are its competitors?
Well, basic human nature. We want results now.
Instant gratification.
Right. And the constant temptation to try and time the market, get in and out quickly for fast profits,
Yeah.
which almost never works consistently. Plus, just the endless stream of news, social media, trends, all pushing for immediate reaction, distracting from the long view.
So, wrapping up the lessons for entrepreneurs on patience.
Think long-term, years, decades, not just the next quarter. That perspective is vital for building something lasting.
Patience and discipline are assets.
Incredibly powerful ones. They help you ride out storms and seize real opportunities. And making smart decisions about where to put your resources, your capital, your time, guided by that patient long-term view, that's fundamental to success. So when you look at it all, Buffett's incredible success story isn't really about him not feeling fear. It's more about how incredibly adept he became at recognizing fear, understanding it, and then, managing it strategically across all these different areas.
Yeah, that's a great summary. We've touched on that fear of starting small, dealing with market irrationality, overcoming a really personal fear like public speaking, the discipline of staying in his circle of competence, fearing the unknown, really.
Right. And the fear of making mistakes countered by candor, his very real fear about AI and disruptive tech, and finally, that foundational patience, resisting the fear of losing control in the short term.
It really covers a lot of ground.
And these aren't just investing lessons, are they? They apply pretty broadly to anyone trying to build something, innovate, or just navigate their career.
Absolutely. So, a final thought for you listening. Maybe take a moment to think about your own fears, the things that cause you anxiety in your work or life. How could applying some of these principles, maybe understanding your own fears like Buffett seems to understand his, help you make more strategic choices?
Yeah, maybe facing those fears, understanding them, is actually a powerful starting point for finding your own path to long-term success.
Welcome to the deep dive. We take the sources you send us, dig through them, and pull out the really interesting bits for you.
Yep, that's the plan.
Today we're talking about Warren Buffett, but maybe not in the way you usually hear about him.
Right, not just the investment genius narrative.
Exactly. We're looking at the role fear actually played in his incredible career. We found sort of 7 key moments or stages where he faced some significant fears.
And the fascinating part is how he dealt with them, how he adapted. It gives you, I think, a much richer picture.
Yeah, it feels like a different angle on a story many people think they know. We often focus on the wins, right? The bold moves.
But understanding the anxieties, the fears behind the scenes, and how someone like Buffett managed them, that's where the really useful insights are, I think. Stuff that connects more to our own lives.
Okay, so let's dive in. First up, the fear of starting small, building that initial foundation. It's easy to see Berkshire Hathaway now and forget, well, everyone starts somewhere.
Absolutely. And his start, while ambitious, wasn't maybe as explosive as you might think. He launched his investment partnership at 26
Okay.
with about $174,000. Now, that was real money then, definitely, but maybe not the giant war chest you'd imagine for someone who'd eventually be